Another major ticker that we're tracking here on the day. Shares of ARM, they're down over 8% since its public debut, but analysts feeling bullish on the semiconductor company. Here's what analysts have to say. Guggenheim and Citi both initiating coverage of the stock with a buy, plus JP Morgan joined in with an overweight rating here. So let's dive through what some of the companies are saying. I'll start with B of A here because they're saying that ARM is a unique beneficiary of rising semis design complexity here. They have a well, we've mentioned the buy, but $65 is what they're looking towards right now, and that is compared to the current price that you're seeing on the screen, top right corner of about $54.63.
Yeah, Brad, going on a couple of the reasons why Bank of America is bullish here on ARM, just talking about the pricing power that the company has. They see it as a gainer in rising cloud, also automotive workloads. Also talks about, though, some of the risks here that is associated with ARM Holdings. And in that, they talk about the China exposure there, also Qualcomm litigation. They don't really mention this here as one of the headlines, but also the fact that SoftBank still owes just about 90% of the company. Certainly one of the risks that have been highlighted by many investors over the last several weeks, ever since ARM went public, just in terms of the volatility or what that could mean for shares going forward. But largely speaking, it has a pretty strong reception on the street. You mentioned the outperform rating, the buy rating there from Bank of America. Barclays also initiating coverage with an overweight rating. Citi has a buy rating on the stock, saying that in the more rapidly growing infrastructure space, long-awaited share gains in servers are evident. They also went on to say that ARM sales are growing faster, and that warrants a premium valuation. Guggenheim also coming out with a buy rating as well. So we talk about the fact that maybe ARM hasn't gotten the reception here from investors as many had hoped in the first couple of weeks as a public company. But when you talk about some of the longer-term duration and the longer-term play for ARM, many on the street saying that it could be a good buy right now at these levels. Yeah, JP Morgan also initiating coverage of ARM with an overweight rating, $70 price target here, talking about solid revenue visibility, margin earnings expansion, and predictable rising royalty rates and licensing agreements. Remember, ARM had kind of changed the revenue model that they were bringing to the public markets as well here versus, going after being able to get an average selling price or at least see some type of return because of royalties on a per chip basis. Now looking at it on the average selling price of the actual device that the chip is going to be going into instead now. Yeah, certainly. Well, we're seeing some reaction on ARM shares right now.